So Consolidated is a relatively new player in the uranium space. We've been around for just under 2 years, but I think we've done a lot in that time. I'll take you through that. We're now in 4 different countries, 13 projects. We're a global uranium developer with near-term U.S. production potential. I'll walk you through that in my presentation. So we do think we have the right strategy. Uranium has emerged from a 10-year bear market. Of course, we thought that was coming, and that's why we put this company together a couple of years ago. And when we did that, we looked at what strategy we wanted to deploy, and we went back to the previous bull market and recognized that consolidation was one of those strategies that really worked. And when you talk about outsized returns, Gwen, those types of returns were generated by consolidation plays in that past cycle. I'll talk about that in a second. We also have the right team. The company was originally founded by the team behind NextGen and Mega Uranium, companies that the audience might be familiar with, and many of those people are still involved. Since I joined 2 years ago, we brought on a number of other members to the management and board who have tremendous experience both in uranium, but also in mining finance, project evaluation, acquisition, and development. We have the right assets, we think now. I mentioned we've acquired all of these projects around the world. We've got a diversified portfolio for a reason. I'll talk about that in a second. We're in great jurisdictions. We're in Canada, we're in the US, we're in Australia, we're in Argentina. And now importantly, in our last and most significant acquisition, we picked up a portfolio of past producing mines in the US from Energy Fuels. I'll talk mostly about that in the presentation. We're really excited to start working on those projects this year. Just a quick snapshot of the capital structure. I think the things to highlight here, of course, we've had a nice run over the last 2 years since we started implementing this strategy. We do think, of course, there's lots of room to go, particularly if the uranium price continues to move as it is. I think the thing I would highlight here is that we have, with over $33 million in working capital, we're very well financed to execute on the strategy. And I mentioned Energy Fuels. We did the deal with Energy Fuels as part of the consideration. They took back stock, and they're a major shareholder at just over 19%. You can see some of the other shareholders on the register there. In terms of the team, I've been in uranium now since 2006. I've been on many different sides of the coin. I've been a research analyst. I've been an investment banker. I've been on the buy side. I've helped run a fund that focused on uranium. But then a couple of years ago, I stepped out and decided I wanted to be an entrepreneur. I saw there was an opportunity to create companies in the space. The first company that I helped create was a royalty company focused on uranium. That's public now and has done extremely well. 2 years ago, as I said, I came and took over as CEO of this company and then added the rest of the team here. The most recent addition, which I would highlight on the team, is Marty Tunney. He's a mining engineer by training, has lots of experience bringing mines into production, not uranium mines per se, but that experience is going to be extremely vital to the company as we move from asset acquisition into development. On the board, I think I would highlight there, I'll just highlight Mark Chalmers. He's the CEO of Energy Fuels. Again, as part of the transaction we did with them, Mark has joined the board. Mark's a 40-year mining engineer, has tremendous experience in the uranium space, of course. And I think his joining really speaks as the commitment of Energy Fuels has to our company in the transaction. In terms of outsized returns that were generated in the past bull market, and the consolidation business plan, I just put this case study up here. This is a share chart of a company called Mega Uranium. They were one of the original consolidators of the uranium space back in that previous bull market. You can see this share chart shows their performance from the beginning of 2005 to the end of 2006. And you talk about these outsized returns. Over that period of time, while they completed 9 acquisitions and raised $50 million, the share price was up 3,400%. Market cap went from 15 million to almost $1 billion. And so this was really our guide when we started the company. Let's go do Mega again. But Mega wasn't the only one that was doing this at that time. Paladin, Energy Metals, Uranium One, lots of other companies that the audience would remember deployed this strategy very, very successfully. I think I should also highlight that, of course, while this was happening, their share price performance was tied in with the rising price of uranium. We have uranium price in green there going from 20 to the mid 60s at the end of 2006, on its way to over $100 in 2007. I think the setup is very similar. You can look at our share chart for the last 2 years. The uranium price looks very similar. And if we have anything like we did in 2007 in 2022, we're in for a very good year. Okay, now this was kind of the whiteboard again. When we started this business, we said, okay, let's go around the world and consolidate projects. Mostly, we were looking at the forgotten and orphan projects from the last bull market. Particularly, we were looking at a diversified approach. Over the period of time that I've been in this space, we've seen time and time again, single asset, single jurisdiction companies have been derailed for one reason or another. We wanted to give ourselves and investors insulation against that, so we've diversified, set across geography, also stage of development, deposit type. All of the acquisitions we've done to date have significant previous expenditures, including historic resources. I'll show you those in a second. All of them, we believe, have attractive development characteristics. I won't have time to get into it today, but if you look at the types of structures that we've acquired these projects on the basis of, I think we've acquired them very well, and very good, very unique and flexible structures, and ultimately what will turn out to be very low prices relative to where they can go. What we do next, we're going to continue on the M&A front. I did say, the focus will turn into developing the projects in our portfolio, but I do think there's a lot of M&A still to come in the space, and I think that we'll be at the forefront of that. Okay, here's the portfolio. I mentioned we're in these 4 countries around the world. We've got a significant resource base at over 100 million pounds of uranium and 220 million pounds of vanadium around the world. We sort of took a phased approach to building the portfolio. Phase 1, if you see the projects in the light green tags, that was the first phase, and that was really acquiring projects to build critical mass so that we could then go and pursue bigger and more marquee acquisitions. And that's really going to be the focus of the presentation today. And those are the projects with the darker green labels and the white lettering. That's the Matoush project in Quebec, and the projects on the left-hand side, the Tony M, the Rim, Sage, Daneros, and the Colorado leases. This is the portfolio of projects that we acquired from Energy Fuels late last year. And that's going to be the focus of the presentation and really the focus of the company going forward. So we'll dive right into the project portfolio from Energy Fuels. The key here is these are historic mines in a prolific uranium district. You see we're we're in Utah primarily, some of our projects in Colorado. This belt has produced a lot of uranium over the years. The projects have historic uranium resources in place, but also very good exploration potential. The key to all of them is they're proximal to Energy Fuels' White Mesa mill. This is the only permitted operating conventional uranium mill in the US. So if you have a conventional project, you need to be close to White Mesa, and you need to have a toll milling agreement, which we have, and we'll talk about that in a second. What's also, so these projects, and particularly the ones that we're focused on the left-hand side of the map, Tony M, Rim, and Daneros, they were all in production in the past bull market. They left production 2013, 2009, 2008. But importantly, Energy Fuels kept all the permits in good standing, so we have a rapid pathway to restarting them as market conditions continue to improve. The focus for these projects this year is going to be on drill programs. We're going to announce to the market very soon exactly what we're going to do there. We're in the planning stages, and we'll be working on these projects within the first half of this year. I mentioned the toll milling agreement. This transaction with Energy Fuels was far more than just buying a portfolio of assets. This was a true partnership, and the partnership came with sort of three agreements. And the toll milling agreement is probably the most important one, and it's the one that really sets us apart from our peers. We own these mines. In order to actually process the ore and create uranium, you need to have access to a mill. This toll milling agreement gives us guaranteed access to that mill. We're the only company other than Energy Fuels with guaranteed access, and that certainly sets us apart from our peers. The agreement also we also have an operating agreement, an investor rights agreement. The operating agreement allows us to staff up slowly over time and have Energy Fuels run those projects on our behalf. The second main project that I would talk about is the Matoush project in Quebec. This is a very high-grade project. It was a subject of significant expenditures in the past bull market. Over $100 million was spent here. And when we talk about grade, at 0.954% in the inferred category, this would rank as one of the highest grade undeveloped projects in the world outside of the Athabasca Basin. And there's a huge amount of exploration potential beyond the resources that we've talked there. You can see in the map, there's 19 kilometers of untested strike that we still have to look through. And I think this deposit has the potential to grow significantly. The focus here is on community engagement. And I mentioned that uranium projects around the world, single asset, single jurisdiction projects have run into hurdles. This project did run into a hurdle about 10 years ago. and it was all to do with local Indigenous agreements and relationships. Our focus is on trying to build those relationships and seeing if there's a path forward for this project. If we can get that path forward, there's a tremendous amount of value to unlock here. The only other project that I'm going to speak about in the portfolio is our Morin Lake project, and we're doing something very interesting here. We're spinning this project out, and so you can see we've taken in a lot of projects, but we always have a plan and an idea of how we might unlock value in these projects. And in this case, we recognize that our Morin Lake project in the central mineral belt of Labrador had the opportunity to consolidate into a regional play. And we created Labrador Uranium. We've done transactions with both Altius and Mega Uranium to add a huge ground position in this area. We financed this business separately, and we're in the process of spinning it out. Shareholders of CUR will vote on that on February 3rd, and it'll be listed before the end of February. The way that we structured the transactions, Consolidated is taking shares of Labrador Uranium, and we're dividending them out straight out to our shareholders. So shareholders of record of Consolidated will get Labrador Uranium shares directly on a pro rata basis. We're going to talk just a little bit about catalysts for the company. This is not a company catalyst, but something that I think the audience would be interested in. There are two main ETFs in the space, the URA and the URNM, and they hold a portfolio of uranium equities. They've grown their assets tremendously over the last year through inflows, nearly $2 billion between the two funds. Where there's an opportunity for shareholders who are looking at what moves these funds might make in the future is the URA, particularly the bigger one, does not own a single share of CUR. We missed the inclusion. We weren't included in the last rebalancing. They're rebalancing again, and the rebalancing date is next Monday, January 17th. If you look at where we rank against some of the other groups that are in that fund right now, there could be a significant amount of buying that has to come into the stock. And my understanding is they'll announce the constituents on January 17th, and they have to the end of the month to add those positions. So I think there could be a nice market catalyst there. And in the same instance, URNM, who does own us, we're underweight relative to our peers of similar size. And then catalyst for the company itself. So the ones that we've completed is we completed the transaction with Energy Fuels. We closed the acquisition of our Argentina asset and at the end of last year. And so the catalyst going forward, it's the spin out and listing of Labrador Uranium. Again, shareholders of CUR will get pro rata shares in Labrador once it's listed. We're going to initiate work programs in the US, Australia, and Argentina. We'll have press releases on all of those activities in the coming weeks, engaging with local stakeholders at the Matoush project. Again, we think there's tremendous value to unlock in that potentially world-class project. And then we're busy evaluating additional opportunities. We're not done. There's lots of opportunities that we see in front of us to continue to build the portfolio out. And so I'd say watch this space.